Let's hit live. On quiet now. Welcome to Taking Stock. It is, what is the date? 11th of the 1st, 2024. I'm joined by Vadim Alexander, Head of Healthcare at SP Angel. Happy New Year, Vadim.
Happy New Year, Justin. And hopefully it will be a good and happy year ahead. It started well.
I think it will. I think it will. I think I've kept saying this, but I think the first quarter may be a bit wobbly because we've got all this data coming out, from this. It's odd. Some retailers doing well. It's almost like the retailers with non-big ticket items are doing well. The ones with bigger ticket items are not doing well. But you've also got, wages going. In fact, we'll talk about that in a bit because Marks and Spencer's come out with some figures. It has come off a little bit, the share price, because it done really well. It's almost like we always know this, don't we? When, expect to have good results, the traveling is always where it's at. In fact, the same with Bitcoin and crypto. The ETF has been approved today. We're looking at, and it's had a mega year, or mega 6 months, Bitcoin. But now they've announced 11 ETFs, the SEC, and Bitcoin is hardly up at all. So I did say this was, and it may come off. Anyway, welcome to the show, everyone. Thanks for joining us. By all means, hit that thumbs up button if you could, if you like the content. Share it, and don't forget to subscribe to this channel. And as always, download the Vox Markets app. It's free. Absolutely free, but priceless. voxmarkets.co.uk/app. Okay, let's have a quick look at the markets. See what's moving around here. So here we go. FTSE 100 down a little bit, 0.07%. FTSE 250 is good, up 0.37%, which is always good. It's always chimes with the AIM All share a little bit. When the FTSE 250 is rising, the AIM All share. In fact, the last couple of days, Vadim, I've noticed that the AIM All share has been sort of steady, ticking up, whereas the FTSE 100 is down a bit. And of course, FTSE 100 is largely bigger international companies, dollar denominated. So maybe dollar weakening a bit is having an effect. But Whitbread, Anglo-American, and I guess mine is there. JD Fashion. I don't know if you saw the update from those a while back. They've come off. They came out with results on the same day as Next. Next hit it out of the park. JD said whether
not great. So
very interesting. But it's one of those, JD Sports, one of the best performers. If you look at the chart, by the way, is the AIM All share there?
Yeah.
Get back into that. But JD, one of the best performers, a really stock market darling. If you go back, it was like 2 pence a share. It went up to 220. So honestly, 100 bagger pretty much. But there's opportunity maybe here because it's a good business. It will recover. It'll take a bit of time maybe. But I'm thinking, I don't think the consumer is going to be, feeling that flush over the next couple of months, are they, until interest rates start coming down,
It's just a weird picture in the whole consumer, on the consumer side. You mentioned big retail versus small retail. It's a mixed bag. I mean, Next and JD is a good example how one's doing well, the other one's not, or in the latest set of results. I mean, you see that as well with, for example, some of the stocks I like, which I own, the online fashion retailers aren't doing that great. Meanwhile, the airline, EasyJet's just been rocketing. Right. These are consumer discretionary spends in all cases, but very different categories. Right. So airports are full. People are willing to splurge on travel. EasyJet's just marching ahead. If you look at the shares in the last couple of months, and specifically in the last couple of weeks, again. But by the same token, another one has just been a dog. ASOS and Boohoo have been terrible over that period of time.
I did say yesterday. Sorry, so go on.
It's a mixed bag on the consumer discretionary. Do you see what I mean?
Well, do you know what I did say yesterday? That it seems like people are willing to spend on holidays, almost a revenge spend from missing out on holidays, going back over COVID times, but. I said, from a personal point of view, we've been looking at, trying to book a holiday, and they're so expensive. And I said, I can't see them, staying at this level for a long time. And people, after a while, I think people will start saying, I'm not spending double the amount on a holiday I did like a year ago, 2 years ago, because that's what they're at. And I think they will roll over after a while. But it's just one of those things where it's almost people will cut back on fancy clothes or buying a new dishwasher or whatever if they don't need one or anything like that, but they'll say, I still want to go on holidays. But how long will they keep doing that for if the holidays are so expensive? And you've got like say mortgage costs, even though mortgages are coming down, people refinancing. I think I heard a figure of like 300,000 a quarter in the UK will be refinancing this year. And of course, they'll be paying a lot more. So sooner or later, it will cut into the spend of those people. And I just think, I'm not going to, I mean, I don't know about you, but on your holidays, but my wife said, I'm not paying that much for a holiday. And we'll just go, in the UK, or won't go on holiday. So I
Yeah.
just wonder how sustainable this is, this rise. Like on the beach, look at that. It's gone from 88 pence to, it's doubled on the beach. There's a portal, of course, for the thing, and a big app, and EasyJet as well. Is it sustainable, this rises in these stocks? That's what I'm wondering.
I don't know. Yeah, I just it comes back to this whole debate whether we're going for a soft landing, hard landing, all that. And
Yeah,
I've always believed it's going to be a soft landing. I just
yeah,
don't feel you're right. The rates still haven't trickled through. But again, look, inflation's coming down aggressively. There's 3 forecasts that were just adjusted, I think, this morning,
yeah, yeah,
saying that it's going to drop down below 2% by April. And that the bank's going to start cutting rates much faster than anticipated. The US has already proclaimed that they're cutting rates in 2024. Were we saying this 3 months ago? No, we weren't. We were still
yeah,
saying, oh, rates longer, higher for longer. Now it looks like people are adjusting. Anyway, we'll see. It is a mixed picture. It's not clear,
yeah.
but we've been talking about hard landing versus soft landing for
Mhm.
almost 2 years now.
Yeah, yeah,
And
yeah,
and
yeah.
and and guess what? It's been a soft landing because there has been no landing. The
Yeah,
economy has just
exactly.
been chugging
Yeah, yeah.
along.
But also, I think we also focus on indices a lot, and and like I said, there's always individual opportunities that are.
Yeah,
And I
you're
think the fall has
right.
happened. We've had the fall. We can see from the AIM all share here that the aggressive fall has happened. A lot of stocks are bottoming out. So if you come out with a bad trading update, you'll still get hammered, I think.
Yeah,
But nevertheless, we're not seeing a complete general washout of all stocks. Some stocks are rallying. This is the indicator. I said the title of this video is, this is a key indicator for small caps, and I believe if this happens, we're in a bull. And this is what I'm talking about. So this is the 200-day moving average. Now you can see the AIM all share sort of broke down below it. November 2021, and that was the end of the bull market pretty much. And it's come down 45%. It did try to rally. Like, so we had a massive sell-off down here to October, the lows, and it rallied and pierced the 200-day moving average. But then it rolled back down, and it hasn't gone above that again, right? And it rolled all the way down, and recently it's gone above the 200-day moving average, and that's quite a good sign. We get a strong break of that, but it's come down again. Now, it doesn't seem like a fall off like last time. Last time it didn't last for long; it just started falling quickly. Very good. You can see here we have got some kind of support here. I'm thinking if this goes back above the 200-day moving average, that's a very good sign. It's not done that for 2 years.
yeah.
So I'm thinking that shows support and sort of almost a baseline rally, I think. So and let's be honest, the outlook is saying interest rates are coming down, so that is good for equities. So I
Yep.
think that will happen. I think it'll break that previous high, which is 764 of AIM, and it'll go higher, and that'll signify that we're back towards a bull market in small caps. Because, to be honest, I mean, the economy is not going to get any better. And that's a good thing for inflation. And like I said, inflation is sort of coming down, and then interest rates coming down. So I do think we are at the start here, almost the start of, but the bottom is in. I reckon that's the bottom. I don't think we can go any lower than that. 669 on the AIM all share. That was the bottom on the 26th of October. That's what I'm thinking.
I feel the same way. I feel like we're starting also to see small cap stocks one by one get picked off, and that's what we discussed over the last couple of weeks, that in healthcare small caps, uh, you'll start to see it that way. You'll see one go up, and the thing is, they tend to go up a lot in the first rallies, right?
Yeah,
They go up by multiples often, and we've started to see that in a few companies, and the hope is that that becomes a trend, and then you get the FOMO effect of everyone saying, I heard so and so made 3 times as money in that biotech stock. I'm going to look at the one that hasn't rallied yet. You know what I mean?
yeah,
And
yeah,
that, so we are definitely on this last rally, that last leg that you've just shown on the AIM all share, we've seen from October roughly, you know what I mean?
yeah,
We've seen a few companies lead that in biotech.
yeah, yeah,
So
yeah.
it's good to see, and obviously not only welcome. I feel like it's becoming a trend now.
Yeah, That's a 15% rally at the bottom there. So it's for an index. It's quite big there. By all means, get your comments in. Anything you've seen up there you want to chat about? Informer says, why choose between heating and eating when you can just have bought crap coins? Yeah, I suppose those coins are rallying. Have you seen Vadim? There's a documentary on Netflix called Bitcoin. I watched that on Saturday. It's very good. It's a real, it's a real coverage of these guys who basically started up a payments card that could pay straight from Bitcoin into the thing. It was a con. They had the card, the plastic card. They had demos and promos and videos showing it working in the shops. It didn't work, and so people are plowing money into that. These ICOs, these new coins, and I think they made about 32 million, something ridiculous.
But
And
wasn't there, do you remember that big con? There was the one that they invented a coin based on that Korean series, the that Korean.
Yeah. Well, is it the height of the ICOs when everyone's just issuing coins? Right? There's unbelievable amount of nonsense going on. And in fact, Informer there, I know Informer said before on here that he's a bit annoyed that there's research on companies, they don't rally, and yet you got these rubbish crap coins. A lot of them are fraud. They're just rallying like crazy. I mean, if you can get your money out, that is. But the thing is, the difference is, it is risk reward. And if you're investing in, in some of these coins, you've got to be happy with the knowledge that you wake up one day and it's not there anymore. Your money's not there; it's gone. And that's not going to happen with a lot of you can take a big downturn in some small caps or companies, but the creators of those coins could just disappear with your money overnight, and that's it, isn't it? That's the difference.
I mean, wasn't the promise the exact opposite, that these are coins that are completely immutable and no one can change them or steal them because it's just the algorithm can't be tampered with? Do you see what I mean? The whole promise was the opposite. So it's pretty discouraging to see complete and utter frauds. But you're right, it is a bit of a Wild West. And
yeah. Someone says, this is Mark. Hey, Justin, what's your thoughts on the merger between Belvoir and Property Franchise Group the other day? I think that's very good. I don't know if you kept an eye on this, but Belvoir, very good company, and because they do a lot of sort of lettings as well and managed properties, and they announced a merger with another company a little bit bigger than them, but I think it stacks up very well. So recommended all share offer there, and it's just a bigger group. And so they do have Belvoir generated 60 million combined revenue, management fees, and all this. So combined, the group will have approximately 214 million revenue. I think it's very decent. What's the chart on Belvoir looking like? Because
what do you think
I did
of
like
the commercial?
Belvoir.
What's the commercial real estate exposure on that? In that, I don't know.
Yeah, well, I think mostly I don't know. They are. They get most of their revenue, I think, from management fees and lettings. So and let's look, 40%. I don't know what it was, but it's a good company because basically they're recurring revenue from management fees, letting and all that stuff, and then they've merged with another company which is very similar. But anyway, there's a front page of Vox here. Just quickly, Paul does a Cornerstone article there, very good. He interviewed the CEO yesterday, worth chatting about. We'll look at the kind of CyanConnode Bitcoin ETF. Let's have a quick look at Bitcoin. Like I said, 11 now. Let me just get the Bitcoin thing up. 11, I think, ETFs have been approved by the SEC, which is very odd because they also don't recommend them. I think, why are you launching ETFs then? Why are you allowing? And so you can see Bitcoin has done so well from October last year. But today, on the news of this last night, hasn't really taken off. But where was it? Let's have a look. Scroll down. There we are. The SEC has approved 11 exchange-traded funds, Bitcoin. Despite approving the new ETFs, the SEC said it was still deeply skeptical about cryptocurrencies, and that its direct decision did not mean it approves or endorses Bitcoin. They say investors should remain cautious about the myriad of risks associated with Bitcoin and products whose value is tied to crypto. It's very odd, that, isn't it? They say that, but they've approved them. So, I suppose to a certain extent, you can't have, you've got to let the public take their own risks a little bit. You can't just hold their hand all the time because that's what investors are about. It's about risk and reward. And so the best way of learning, I found, is to lose money. If you don't learn a lesson by losing money, then you'll never get any better. And I suppose you have to But trouble is, if they are some of these, well, I don't think it can be fraud. Can they? Bitcoin can't really be fraud. I mean, these coins coming off them are. But I
I
suppose
just
you've got to let the public take their own risks, haven't you? To a certain
Well, I
extent.
just think the regulatory framework hasn't caught up yet with this new financial instrument and or category. And that's just probably all they're doing. They're at least putting a caveat into anything that they do and saying, be careful, buyer beware, this isn't properly regulated yet. And it
Yeah.
isn't, it isn't.
No, exactly. Well, you know what the funny thing is, Satoshi Nagasaki, the guy, whatever his name is, who invented apparently
Yeah.
Bitcoin, who no one knows who he is. No one knows if it's a he or she. And so they assume 21 million coins, 21 million Bitcoin is the limit. I think, well, how do you know that? How do you know that? If he wants to come out, surely he's in charge of the code in some way, isn't he? I don't know. Couldn't he just add a few more million coins if he did? Great. I think it's really odd. You don't know who the heck it is who created it. It's very
We don't know who
clever.
Banksy is.
What? Yeah, it's
We
like
don't know who
Banksy. I
Banksy
know.
is. His art's worth millions.
I know.
Well,
Yeah.
I think we do know, but I'm just giving it
Yeah.
this
Yeah. Yeah. Okay.
inconvenience.
Let's have a look at some of the most most solid companies, Rosalind, Marks and Spencers. It's quite nice to see Marks and Spencers up there because it's had a good run. And like I said, today it's come off by, it's the biggest fall on the FTSE 100, even though the figures are very good. And in fact, if you look into them, because it's better to travel, isn't it, than arrive, And like I said, food, always good food. Total sales up 10%, like 9.9, clothing and home. It's all up pretty much. International was down a little, total sales, but it's looking good. But they did say here about they are worried about the outlook for this year. And of course, wages are going up, which is good for spending, but of course, it's going to cost them a bit of money. Food inflation is coming down a little bit. It's still going up, but it's not going up as fast. But they did say they worry about the cost of living crisis plus them having to pay, wages, higher wages and stuff. And that's the thing. If you're in those areas where people are on, the national living wage, that's going up, So you've got to
Yeah.
factor that into, your investment, the company you're invested in. If they are, a lot of the people they employ are close to national living wage, that's going up. That's an extra cost, isn't it?
Yeah, but I would say there is something that I think is maybe lost in all this inflation discussion is that wages tend to react to inflation, right? So inflation happens first, wages, then people demand a higher wage because the cost of living increases, right? Okay.
Yeah.
But if we're in a disinflationary environment, which we're in now, we're not in a deflationary environment, but just inflation is slowing very quickly. Okay. What you have is the lag of inflation is coming down, but wage inflation is still coming through. So all of a sudden, we might be in a scenario where actual inflation, where people paying at the till, is more reasonable, and yet they just get the wage increases that they've been asking for the last year. Do you see what I mean? So I think we're in a kind of good environment. Actually, it's the cost of living crisis is ending, and wage inflation is still coming through because people are getting the pay packages they've been kind of negotiating for the last year, saying, oh, cost of living has gone up, I need a higher wage. Well, you get the higher wage, but the cost of living is actually no longer as high. So that creates a bit of a kick to the economy. But anyways, we'll see. But in spite of the cost of living crisis and everything, we still are not seeing a big recession. None of that has happened. There has been no massive increase in unemployment. We're seeing a soft landing. I've been saying this for 2 years. I don't see the hard landing that everyone has anticipated. It's just not happened.
Yeah, and in
I don't
fact,
see why it would happen now.
Yeah, and in fact, even though people having to remortgage are going to remortgage at higher levels, they are quickly coming down now. I mean, yesterday I reported on Santander and Barclays. Barclays are now they're giving a 2-year mortgage for 4.1%. So
and some are dropping below 4. Exactly. And rates haven't even started to come down yet. The forecasters are now saying inflation is going to come down even faster than anticipated. The Bank of England hasn't said that, but they have a policy remit where they might want to talk down the markets. Do you see what I mean? They have other reasons why they don't want to just proclaim early that rates are going to start coming down, right? But all the forecasters are starting to change their view on inflation and saying it's coming down much faster than anticipated. So it's true. I don't even think that maybe mortgage rates will stay high for very long. Yeah, they
Yeah, the
may
thing
come
is, so
down.
I did say that the reason why, if you look at, you've got to think, why is inflation coming down? And in my mind, obviously supply chains have eased up a bit, but on the demand side,
Yeah,
has demand gone down? Because after, because like I said, people are reining it in, which means the economy is slowing. So it is a lag effect, I know, because we've gone through, traditionally a seasonal uh, time where people spend more. So we're going to see, I think, the first quarter, when we start seeing spending in the first quarter from consumers, how that will change, compared to the previous the comparative year before. Look at that, Marks and Spencer's, right? Since the start of October 2022 is 190%. What I'm saying is, if you're jumping in Marks and Spencer now on the dip, you've missed the big rise. It's too
mhm,
late. I mean, look at even if you look at just on the old 200-day moving average, it crossed it at what 132, and now it's 265. That's where it broke new highs here, broke up here, and that was where it probably is worth buying. But a lot of big companies have done big moves. From companies like Rolls Royce and all that stuff. But
yeah,
also people tend to learn about them after the big rises happened, and then they
yeah.
jump in thinking it's going to continue. When you do a company like that, which is what's the market cap of Marks and Spencer's now? It's about 5 billion. It's at 100 almost 200% to the high. So I think you probably missed it. It's a big move.
But some of them have divvies, and look at the
Yeah,
divvy rate, and
yeah, yeah,
that always helps.
yeah, yeah.
It
No, it does.
calibrates
Yeah,
things.
yeah.
Uh,
That's exactly. That's why I've got a fund that pays high dividend paying fund. In fact, that's my biggest holding. But let's look at some news here today. So someone said, "Can you look at CyanConnode Holdings? Are you aware of these, Vadim? Do you know what they do?"
I know it by name, but
Yeah.
yeah,
Well, it says here, CyanConnode is a world leader in the design and development of narrowband RF mesh networks to enable omni-Internet of Things communications with a wealth of expertise. And I think they're big market in India, I think it is. But
mhm.
today they announced an order for 1 million. I like that. Someone just said, "I want 1 million of them." Exactly. Not one less, not one more. 1 million I want. But they said they want to. Where's this? It doesn't say what. The order relates to smart metering deployment in Nagpur, Maharashtra, which is supply OmniMesh modules expect to commence in the quarter. Installation will be completed within 27 months following thing. So they don't say how much that is there. 6 million. Does anyone know that the revenue on that would be? But it seems like let's look at the interim results. So 35 million market cap, that 14% today. CyanConnode. They did revenue of 5.8 for the year. So let's say it's doubling a bit more. So let's say 12 million. So 3 times sales, gross profit of 1.8, operating loss 2.2. So cash received from customers, cash and equivalents at the end. So they don't have a lot of cash there, and they are still generating a loss. So I know for a long time, a lot of people have asked me. I invest in these many years ago, and they've been. I don't know what they're like of late, but have been a serial disappointment for many years, and they've continued to make a loss when they've been talked about. Making a profit. If you scroll out, you see from
Yeah,
2016, probably back years when and they've been a bit of a serial disappointment. They had some big rallies, but they never, turned a profit, and so they've been going for a while. So you got to question, when is that going to happen? Because, like I say, they keep coming out with big orders, and I'm thinking, well, when is it going to turn a profit here? I don't know. So if you're a fan of CyanConnode, let me know. What's your thoughts? If you hold them, when are they forecast to be profitable? If they are, why are you holding them? Because they do have these big orders coming in, but again, they still seem to be making a loss. So it's figures don't lie, do they?
but
Yeah.
look at that rally in the last month or whatever. If you look at
Uh,
that, I mean, that's a
yeah.
very aggressive rally.
Yeah, from 7 was almost it almost to one point it nearly doubled. But it
Yeah,
does that. It has these massive rallies. I mean, look at that run from 2020. It went from 1.5 to 29 pence, 28 pence.
yeah,
So almost sometimes when that happens, you get a lot of people following it, hoping for that to happen again, hoping that will go again. But I don't know if they've issued shares then, if the market cap's bigger, but they're 35 million. I mean, and, they're not, based on sales, they're not that cheap really. A sales
yeah.
multiple of 3 and
Mm.
loss making. So not one for me, but if what's your thoughts on those? Gervais Williams' favorite. Yeah. Gervais is a very clever guy, and you know, I get a lot of ideas from Gervais. But it's when you are, in my mind, I don't know what your thoughts are, but fund managers can afford to have, you know, more misses because they own a lot more stocks, you know.
Mm.
And I'm thinking, as a private investor, you've got to be better than a fund manager, essentially, because you can't afford, you can't, it's not worth holding 100 stocks if you're an individual investor, because you can't
Yeah,
hold enough of them to make a difference. So you're
yeah,
better off, in my mind, holding a fund which will
mhm,
deliver, say, between 5 and 10% a year for you, safe, and
yeah,
then try and get better than that on individual stocks,
yeah.
but not holding too many. Because it's best, in my mind, I thought it's best, because when I first started, I held a lot of stocks. And you know, I wasn't full time at it. And I thought, I can't learn all about these stocks. You're better off researching deeply in, you know, a few stocks, but also having a fund there as a bit of a backbone to your portfolio, I think, you know?
Yeah. Well, just quickly on CyanConnode, I would just say you've put your finger on the big red flag, the cash position. Look, I
Yeah.
don't know enough about that stock, but if I opened that for the first time and said, okay, you've got whatever it is, 500,000 in cash, and you're burning two and a half a year, or I don't even, was that a half year results? Doesn't matter.
Yeah.
You're burning in the millions and you've got 500,000 in cash. There's a problem. There,
Yeah. Yeah. Yeah.
oh, and
Yeah.
better
Yeah.
still, your stock's just rallied by it's doubled. Guess what's coming? A placing.
Yeah. Yeah.
You
Yeah.
know what I
Yeah.
mean? So,
Yeah.
there's just no
In fact,
debate. Yeah.
just saying here, they did raise, when was that? When was that? The results too? Because in November they raised 2.7.
Okay. But then how come they had 0.5 in cash? That
So the 30th September, oh, because it was our post period. So post period they raised yeah, let's look cash for the okay, so they did raise some money there. They raised 2.7. They
there
had
you
cash at the end of
go.
November
So in that
was
rally as well. Yeah.
yeah. Oh, so they had cash at the end of November was 1.1 with a further 600,000 received from customers in December 2023. So there we are. So they raised some money, 15 pence. Where are they now? They're well
And
below that raising, you know.
what's the
So.
burn now?
Yeah, so well, exactly. If you look at the interim, let's look at that. You know, operating loss 2.1. Pretty much. If you scroll down
So they
to
raised 2 million and they're
yeah,
burning 2 million a half per
yeah,
half
in a
year.
half. Yeah, so they bought the net cash operating activity is 2.7. So like I said, they've raised pretty much what they burned in 6 months.
Yeah.
So
So they're
yeah,
going to
you know.
need cash again. I mean, this is without question, right?
Yeah. So there we are. So that's CyanConnode. One of the most read is Eurasia. This again, this you know, I know a friend, right? Sorry, I know a friend. I have a friend who approached me and said, "What do you know about Eurasia?" And I said, "Very risky company. It's in Russia. It's got some assets. It's been touted a lot on internet and all that stuff. I would stick away from it. It's quite risky." And he said, "Oh, guy who works next to me because he owns he's got a sort of." I don't know, works. He's got one of these outlets, you know, industrial units. And he said the guy in the unit next to me has put loads of money into this. I said, "What does he do?" And he said he's a engineer or something, or completely unrelated to investing or mining or anything, you know. And he's put a big chunk of money into that. I thought, really? And this was before the Russian, you know, Ukraine sort of invasion. And I assume he's been taken to the wash because to the cleaners because look at that. That is the chart. I think it was up. He asked me about this, you know, up here where it's 31 pence a share, and now it's 1.9 pence a share. It's
Yeah.
funny how sometimes stocks and shares get traction amongst retail investors who don't normally invest and they get pushed around. Like my friend who contacted me doesn't invest, but he'd heard about this company. I thought, well, how does that rumor mill generate that kind of interest when it's a very highly, it's not the first kind of stock a new investor should invest in. You know, it's a resource company in Russia, for heaven's sake. It's highly risky, you know, and it's
I
odd
think
how these things get passed around, isn't it? You know?
I think this one, if you go back further, look at that chart. It has to do
Yeah.
with that first rally. People made
Yeah.
50 time
The
returns
hype.
on it.
Yeah. I know. Yeah. So it's
So it's
anyway.
just
That's
never left that initial, you know what I mean? The hype
yeah.
around that initial rally probably is never
So
quite dissipated.
Yeah, exactly. That's it. You've got to be careful of that. So Supreme Court tax litigation win, and I don't know how much they're getting. The first tranche payment's not a lot, 480,000 and close to a million and a half by the looks of it. So it's not a huge amount. Again, another one here. It's like always read. Doesn't matter what they do. RNS release total voting rights. This is like monetizing inventory, and apparently it's going to be using blockchain, but never really come to fruition. And it's highly read every time because of the hype of the rise previously. And then all of a sudden, look at that. So it came out and when gangbusters from literally 0.04 and it almost 10 bagged pretty much. It's gone down ever since. And literally it's gone down and down and down. And I can't see a business model there at all. They're trying to, I don't know, just odd. Anyway, Abingdon
There's one
Health.
there, there's one there, MyHealthChecked, actually, right before we do Abingdon, if you want
Yeah,
to just go back.
My health. In fact, I just watched a bit of a presentation on this the other day, just to see what they did. But
they had a good set of result, well, a good trading update actually. They did doing about 11 million in revenue.
Yeah, well, look at this. I mean, the thing is with this, their cash, if that market cap is correct, is their market cap.
Yeah, it doesn't make any sense, this stock. Absolutely. I've always liked it. It's not, when you talk about COVID testing to anyone today, people say, please stop talking to me about COVID testing. Okay. So I completely agree that the area where they're generating revenues is COVID testing. But this is one of the few companies that actually has a nice retail base. Every year, people are going to buy COVID tests at Boots. Guess who sells those tests to Boots? This company. As in, they're distributing this test, their test.
The problem is they have to rebase a little because they're never going to sell as many COVID tests they did like a couple of years ago. And so if you look, previously
this is the trading statement right now. This is the COVID tests that were sold.
Yeah, exactly. But what I'm saying, they've come down from like 22 million last year of sales to 11 million. So you have to rebase it because, but if they're going to consistently do about 11 million, make a profit, and they've got cash 7 million, they think, okay, they're not, it's good value, but have they got growth? That's the trouble.
So this is maybe
it. So growth there.
So exactly. So in this case, what the company, is very publicly disclosing that they're trying to move away from COVID testing. Okay. Yeah. And they have a whole battery of tests that are now available in other areas, which is great. They just haven't generated the revenues from them yet. And that's going to take some time without question. That's where the growth will come from. But what is surprising repeatedly is, unlike all the other COVID diagnostics companies that are still going in reverse, these guys, they have a test that is robustly selling COVID tests every year in Boots still. So COVID's come and gone. Testing continues. They found the new kind of baseline that's no longer going backwards, and that just keeps generating every year. So that's what we're seeing here now. Okay,
yeah, and what they need now, like I say, if they can, as long as they did say now the EBITDA sort of break even, so that's good. So if they can maintain a positive, a break even level, and then get growth elsewhere, because at the moment, of course, we're still comparing them to the previous year's sales, which is quite big, and that's going to. But if they got that base level, like you say, of 11 million a year, and they start growing them with other tests and other applications, then that's good because they're not burning cash anyway. But it looks
that's the strategy. You've got it. That's exactly what they're trying to do. They're explicit about it. I think that bit is hard to achieve. I think it's very difficult to anywhere to. I mean, COVID is dwarfs their other test sales, right? So it's going to take some time to generate growth from other panels, and they have many, and their product is slick and it looks good on the shelf, and it has a lot of potential. But I'm still surprised by what COVID is generating here. I think they're mispriced, though. I think that's the bottom line, is that even on what we see today, even without the growth, and even if the other tests take longer to achieve revenues, it's mispriced. Like, like you say, we're paying cash for cash. Currently.
Yeah, they've got lots of tests there. They're just going to make those take off a bit. That's right. Yeah. Okay, so one thing to say, whenever I look at stocks that are small cap, micro cap, nano cap stocks, there's a couple of things I look at. The most important thing is it's got to have growth, and because they are growth stocks now. And then I look at value, growth and value. You pair those two up, you've got a good thing going. So they've got good value, What they need is growth, and they've
Yeah.
got no concerns with cash. So that's good. Yeah, no, and so yeah, and
That is the weakness currently. It's not
yeah.
yet coming through those other test sales. Yeah.
Yeah, and another one in the same kind of space, it came out Abingdon Health. They came out with the trading update today.
Yeah.
ABDX just took out, what is the market cap here? They are sort of 12 million down by, close to 14% a day. And they did say that revenues more than doubled to
Yep.
2.4 million. This is for the half year. So you can assume they do 5 million, so two times sales. Unlike, you know, less than one time sales is MyHealthChecked, and they got plenty of cash. So how much cash? So the company's confident in the prospects.
1.9 in cash. The
Yeah.
cash is coming down. They are
Yes.
burning here.
Mm.
If you compare the two companies, you're
Yeah.
absolutely right.
Yeah. They are.
Revenues are dwarfed by the other company.
Mm.
They're all in the same field of they're all ex, COVID companies, right?
Yeah.
COVID
Yeah.
testing companies. So, I mean, revenues are growing, you're right, but from a very low base.
Yeah.
And the cash burn there is there's a worry there, right?
Yeah. Yeah.
So
Yeah. Exactly. Yeah.
so
And it's
here what you're saying is exactly the comparing the two, right? One
mm.
is delivering growth, but the value is not it's not quite clear yet. You know what
Yeah,
I
and they're
mean?
loss making, and they left less cash. So yeah, so the safer option probably would be like I say, my health check, but they've got to get growth,
Yeah.
and hopefully that will come with their testing, the more tests, because they've got a good outlet, like say Boots, the biggest of
Yeah.
retailer in the UK, pretty much in that field. So yeah, but I'd want to see the growth first before I get in there.
An
Um,
interesting combination, those two businesses.
yeah, they are, aren't they? Maybe we should get together and help
Exactly.
each other. Do you know what? This is funny. Cellular Goods, they've changed their name to focus on AI beauty opportunity, right? So up 22%. This reminds me of dating single uranium girl. No, I'm married, thanks. But this reminds me of, I don't know if you're investing during the dot-com bubble, and it was a bubble. And like I said, I was making, it was one of the, when I started investing. And I say, you couldn't, all you need to do really was invest in a company, doesn't matter what it did, as long as it changed its name to .com, it rise, and everything rise with .com at the end. And companies on AIM were doing this regularly. They didn't matter if they had operations, if they had cash, just change the name to .com, it rise. And I was making money. So I didn't care how I was making money. People with the rumors of a bubble, I didn't care because I was making money. All of a sudden, the bubble popped. I lost all my money. And so at the moment, we're not there yet but you are finding you've got to decipher what's real AI and what's not. But they've changed the name Cellular Goods, to AI. It's now going to become what's it going to become? Cell AI PLC. And literally, what they're going to be doing is meet your Cell, your AI beauty expert. Try Cell now, and it's basically it seems like ChatGPT asking you about your beauty and stuff. So I don't know how that works, but to me, you've got have they got a real AI product? That's what I'm thinking of. And there are certain companies that do, and I can name many. Like for example, you got Long Life AI. A really good AI product. In fact, Intelligent Ultrasound invest in really good AI product. Demanded by bigger companies. But then you've got to be decipher: is this a real AI differentiator, or are they jumping on the bandwagon?
No, I agree. I think AI has all the ingredients of, the dot-com bubble. You're right.
Yeah, yeah. Any companies you can think of in the AI? In fact, what happened to Austin recently? That one that went to Nasdaq. People are complaining they haven't got the shares yet back from that. What was that called?
Yeah, and MD, that one is actually an AI company,
Yeah,
MDAI.
very good AI. Have you
Yeah.
got your? Did you do you still hold shares in those? I mean,
I still do. Yeah. No, I think, look, I think the transfer to Nasdaq, we've discussed this at length in the past, has not been, it's been disappointing. It wasn't,
yeah,
it's the classic example of a SPAC deal, right? And it was too good to be true. It turned out to be that way. It's obvious. The SPAC deal translated into a share price decline, even by AIM prices, by AIM pricing, where they closed there, they're down on what their close on AIM was. But inevitably, I do think that a proper AI company, which they are, which has a $250 million of financing from BARDA, which is soft financing, a granting agency, shouldn't be worth 40 million market cap. It just doesn't stack up. So whatever it is that's holding the shares back today in terms of trading out there, and maybe there's still some shareholders that are we don't know. People short stock in the US. It's totally a different market to here.
Yeah.
But whatever is holding the stock back, it's irrational in the long run. They have a $150 million contract, which is being deployed right now. And, they're working towards the 55 million initial tranche. And that's contractually agreed. And not just that tranche is larger than its market cap. And this is also, it's not equity financing, it's free financing.
Yeah. Okay, some of the sort of rises on news here. Trustpilot, which I think when did that it hasn't listed long, was it? I think it listed during the bull market, the end of the bull market. Let's have a look. Here we are. Yeah, there's so many companies listed during the bull market, didn't they? And so it listed 250 pretty much, went up to 475, and then came all the way down. It's a great brand though, Trustpilot, isn't it? Because they're on everything now. If you've got a website and you're selling stuff, you've got to have a good rating on Trustpilot. It is one of those identifiers, so I do quite like it. But I mean, I don't know what their figures are like. So they are 729 million market cap. What's the directorate change? Who's changing it? Non-exec. That's fine. Okay. Trading for the year ended 31st December. So total revenue. God, it's not cheap, is it? That's the 176 million. So they got average recurring revenue that's very good. Total 195. So what is that? So 70% up bookings, 16% up ARR, reported adjusted EBITDA ahead of the top end of the market. So what is that? They don't say what it is. It's a loss, I'm assuming. Reported adjusted by the top end of what did it say there? Share buyback. I did put them through my spreadsheet recently, and I thought that's not cheap at all. Wow. Close you with 91 million cash, no debt.
Yeah.
Say again. Say again, Javine.
You need to know what the EBITDA is. That's the problem. I mean,
yeah.
like on a multiple of sales, I mean, it's kind of ridiculous. But
so let's have a look. It's I'm looking for the results of the year, the 31st of December 2022. Where's their interims? 6 months. There we go. I hate that. Do you? When they don't put it in the thing, they don't put it in the RNS. I always find people do that. They're trying to hide something, but it's here. Just put it in your RNS. It's trying to open, but there we are. Revenue increase year on year, $84 million.
5.7 million EBITDA. Yeah, and it's a 700 million market cap business, and it's trading on whatever it is, 7 times sales. I mean, that's pretty expensive.
Net loss for the period 2.5 million. I mean, like I said, is it international Trustpilot? I mean, I assume in the UK everywhere, but is it international or is it just in the UK? Well, I mean, it chooses a list in the UK, so I'm assuming it's majority in the UK, but it's in dollars they're denominated. So, anyone know about Trustpilot? Anyone? Because it is one of those companies I think they have got a unique brand, and they are like the go-to now for having your business rated in some way by the public. It's a very good brand, but nevertheless, it's not cheap. Is it? Go.
It's not crazy. It's 4 times sales roughly. If you said the market cap was 7 something.
This is half year. This is, by the way. So 4 times sales. Yeah.
Oh, that's the half year. No. Then it's fine. Then it's not crazy expensive. It's not. If that's the half year growing at 21%. Okay, so forget the EBITDA then. If we have such a small EBITDA, it's being rated on revenue growth, right?
Yeah.
So if you're doing 180 million at the half year, you're doing about 400 million a year. You're on 2 times sales.
Yeah.
That's not crazy. That's not crazy. 21% growth. It's not bad.
Yeah, exactly. Rich Dad says they have a clever business model. They do have a clever business model. Exactly. It's almost like a rubber stamp, isn't it? That's approval stamp for your business. It helps businesses. So it is very clever. But I just don't think maybe worth looking into though. Maybe saying that they look at this. They came down, hit a low, like I said, back in pretty much September, October, 60 pence. They're now almost triple that, 172. So they've rallied very strongly since September 2023. Done very well.
Yeah.
But there we are.
We're seeing a lot of just that trend. Okay, that stock profile is what we're starting to see. So for 2 years, we've seen nothing happen after a decline in the first year and a half. And now they're all breaking out, or not all of them, but several of them. And it's those returns that you want to capture, at least with part of your portfolio, where it's like a 2 to 3 time multiple off those lows, because it feels like the market's moving in that direction now, and a lot of stocks are breaking through. So.
Yeah, absolutely. Okay, quickly on a bit of macro news. You mentioned this earlier, but this is in the Guardian today. They did share it on Twitter, actually, or X now. They're saying quite a few forecasts are saying they may cut rates sooner than expected.
Yeah,
Um, they say the inflation rate will halve to 2% by April.
yeah,
The Bank of England may be forced to bring forward the date the first interest rate cut. So the Oxford Economics Consultancy and analysts at Investec and Deutsche Bank have reassessed their outlook for inflation in 2024, which dropped to 3.9% in November last year. They say fall below 2%
yeah.
within 4 months. How do they know that?
Those are the
It's a
forecasts
good
that
thing to
I'm
have.
talking.
It's nice to have that thought there, but forecasters sometimes not that accurate. But if it comes down even close to that, that's very good, isn't it?
Yeah, yeah. Well, then there's no letter going to the Exchequer. It's just all that happens is that the Bank
Yeah.
of England, it's very hard to argue keeping rates at 5.25 when inflation is on target.
Yeah.
Do you see
Yeah.
what I mean? So
This is
I genuinely do believe, like, if they're remotely right, then rates are coming down.
Yeah. And then, like I say, you get that FOMO because, a lot of people, have taken anyone who invests in small micro nano caps, you've pretty much, unless you've been lucky to pick a exceptional winner. In the last 2 years, you've been taken to the cleaners, and you've seen your portfolio go down by double digits. Now you're thinking, okay, I'm not going to do this anymore. I'm going to put in a safe bank account and get 5%. Or
Mhm.
in bonds, 6%, and
Yeah,
it's no risk pretty much. But when that starts coming down, like I say, and you're only going to get 3-4%, and the markets are rallying by 20-30%, then the money comes back out and back,
correct.
into the markets. And that's when you'll see sort of, share prices rising, money chasing that, pushing up higher and going even further. And I think that's going to happen this year. I don't know when, but we're going to get one of those days where it'll just kaboom and go
It does
crazy.
feel it literally
Yeah,
feels like that the beginnings of that FOMO moment, because what
yeah,
we're seeing is a few stocks. You've just shown one which has tripled, right? There several have done that, and they move very quickly because they've been beaten up so badly over the last 2 years that the ones that have survived and that have value and that people liked and were just watching and waiting, they pile into it quickly. So you get the doubling, the tripling of the stock.
mm,
Then you start hearing about people who've made money, in 3-time returns in
yeah,
some biotech stock, and then they look at the next one. So what we're seeing is we're seeing stocks starting to get picked off, and they get picked off like that. One
yeah.
goes, then the second one goes, then the third one goes. So, it's not a bad time to look at the ones you've liked or the ones you've been watching, the 5 or 10 stocks you've been watching. You've probably missed, 3 or 4 of them, maybe half. There's the other 5 left, and you don't want to watch them all go.
Yeah, well, it's almost like if you go there 3 years, right, and you sat around the Christmas table with your family, maybe your grandfather's there or whatever, and you've been boasting that you've done sort of 50-60% in AIM on stocks, the last 2 years you weren't doing that.
No,
You were
exactly.
very quiet around the dining room, and
Exactly.
meanwhile your grandfather's saying, "Well, I'm getting 6% in government bonds."
Yeah,
And,
yeah,
oh,
yeah.
that's quite good. Now, in this Christmas probably, you're
Exactly.
back to
It's the
boasting again,
time.
and that's when money will go back in. And sitting back to Rich Dad says, do you think liquidity will come back to AIM? Absolutely. It's part of the process.
Yeah,
This washout of liquidity kills, almost many rubbish businesses that shouldn't have been here. With cheap money, it really damaged, zombie companies have survived for a long time on cheap money,
yeah.
but this has washed out some of those. And when the stocks start rising, like you say, money will come back in, and the stock market goes up and down, and over time it goes up if you're picking good companies, of course. But absolutely, it will come back.
And
Any
it's
views on?
come
Yeah,
down quite a bit. I mean, and
yeah,
for a longer period than we've seen in a long time. So, we're for example, in biotech, we're in a 2.5 year down cycle. That's
yeah,
very long. And the stocks have come down aggressively in that period. So now they're
yeah,
starting to bounce. They're bouncing aggressively because if you were to come anywhere near the previous those highs, you're looking at over 10-time returns.
yeah.
It's so that's why I
Um,
think people are buying when it comes back, liquidity rushes back in.
yeah, absolutely. And like I say, and you have that double effect where, share prices rise, people see that, people talk about it, they're making money, people put more money in because other people come from outside the market. New money comes in, pushes up higher, and the higher they go, the more money comes in. It's a tsunami, you know. Sort of,
Yeah.
but someone said, "Can you have S4 Capital?" I don't know much about the. I know St. Martin Sorrel, it's his new vehicle, and WPP, of course, advertising has been hit massively. That is a horrible downtrend. I don't know much about. I know there's a bit of debt there, but it's struggling to even break the 50-day moving average. It breaks down, so I wouldn't even touch that until, in fact. You could have jumped in there in a fake break, but it's come back down. WPP. But when these start to turn, like I said, there are certain sectors of hammer. WPP, of course, one of the biggest agencies. In fact, that's on the wrong ticker there. Let's have a look at WPP. That's better. That's a little rally, a little bit. WPP advertising agency is one of the biggest in the world, of course. But once these start to rally, you can safely say, that's it, the bottom of the market, because they've had a horrible time. These advertising agencies, digital advertising, all that stuff. But that's looking a bit better than the other one. But there we are. Marvelous, Vadim. Thanks for that. We've been chatting enough, and thanks everyone for joining us on the chat there. Fingers crossed. Sectors like biotech so depressed. Yes. Oh, by the way, someone did say it's a very clever business. Trustpilot. It was an algorithm. Businesses have to pay in order to keep their reviews rating high. That's clever, isn't it? It's a bit of a con, if you ask me. So you have to pay for it to get your ratings high. About Trustpilot, from the half-year report, the UK contributed about 39% of total group bookings. Okay, North America 21. So okay, so they literally are more in the UK and thing. Vadim, thanks for that, fella, and
Excellent.
we'll speak to you
Thanks,
next
Jonathan.
weeky. All right.
Speak next week.